After 4 months of property prices falling, are property prices now reversing and starting to head back up? Well, according to RightMove, this might well be the case, after they reported that buyer demand increased 55% this month compared to the 2 weeks before Christmas, representing the biggest New Year property market bounce since 2016. But is this just a temporary bounce, or is the UK property market actually starting to head towards new all-time highs? Well, make sure you hang around for the rest of this video, as that is exactly what I will be diving into. Plus, I will also be taking a look at UK interest rates, mortgage rates, where they currently are, and what they mean for 2023. But before we jump into all that good stuff, be sure to subscribe if you are new here, and of course, like and share. Also, let me know in the comments down below what you think is going to happen to the UK property market in 2023. I'd love to know your thoughts and opinions. And while you're down there, please feel free to subscribe to my newsletter. It's called Business Bites, and as a thank you for subscribing, you get access to my personal property investment calculator. Basically, if you subscribe to Business Bites, once a week I will send you a short, helpful email on anything business and finance related. So if that sounds like something you might be interested in, you can subscribe via the link in the description. Now, enough of this chit chat, let's get into the good stuff. So what a roller coaster the property market appears to be taking us all on. After property prices were dropping month after month due to higher interest rates, it now seems that the trend may be reversing, and asking prices are reportedly up by 0.9% this month. This brings the average price of property being advertised to £362,438, an increase of £3,301. Now, it's worth noting that this could just be a seasonal norm, as asking prices do typically rise in January. That being said, this was the biggest uplift since January of 2020. But asking prices do still remain 2% or £8,000 below the record that was set in October of 2022. Now, whether or not this is a seasonal trend and next month we will see property prices decline again is of course yet to be seen. However, if prices do in fact buck the negative trend that they were on and continue on the upward trajectory, then this could be going against history. You see, throughout history, when there has been a sustained increase in interest rates, house prices have fallen. Take, for example, the 1981 and 1991 house price crashes. Both of these were preceded by significant interest rate increases. Now, it's worth noting that in both of these examples, there were also serious recessions, rising unemployment, and falling real incomes, which all contributed, of course, to the house price crashes. But as a general rule of thumb, house prices fall when interest rates rise, because there is a decrease in buyer demand. Now, with the UK starting to be considered a renter's nation, we need to consider landlords and the impact of interest rates on landlords. As interest rates rise, the incentives that come with lower interest rates, like lower monthly payments, they disappear, and there comes a tipping point where the monthly mortgage repayments are higher than the rental income the landlord receives. As this point is reached, there is a strong incentive, unfortunately, for buy-to-let investors to sell, and this forces house prices down, creating a negative spiral in confidence. Now, typically, homeowners are slightly less sensitive to interest rate increases, but rising interest rates do not always lead to falling house prices, as we have seen from March 1984 to June 1985, when interest rates increased from 8.5% to 12.3%. However, this didn't actually cause house prices to fall. In fact, they continued to rise. This was the start of what was called the Lawson boom. Confidence was through the roof and incomes were also rising. The higher interest rates only lasted a year, and then they were cut to 8.3% at the end of 1987. Unfortunately, this seemed to be a pretty big mistake, because this in fact caused a bigger boom and housing bubble later on. Then we have 2005 to 2007. During this time, there was what could be considered a moderate rise in interest rates, from 3.7% to 5.5%, which, as we know, was followed by a rapid house price crash in 2008. But it was the credit crunch that caused the house price crash, not solely the interest rate increases. Even when interest rates were slashed to 0.5%, the housing market did not immediately change. The reason being interest rates are not the only factor that affect house prices. There are a multitude of other things to consider. For example, we have economic growth and real incomes, consumer confidence, access to finance, and supply factors such as a shortage of houses can push up prices. See, between 1993 and 1998, there was a modest increase in interest rates from 5.1% to 7.5%. However, this period was a period of rapid house price growth. Why? Because there was strong economic growth and renewed consumer confidence. House price to earnings ratios were cheap after the 1991 to 1992 house price crash, and banks had gained renewed confidence and were once again lending to people. Okay, now on to the big question. Whether we like it or not, the UK has become accustomed to super low interest rates. This unfortunately means a large number of homeowners and buy-to-let investors may struggle if interest rates rise even slightly, which we're now starting to see. House price to earning ratios are at record highs. This, combined with the cost of living crisis, a modest increase in mortgage payments could result in a lot of homeowners just being unable to pay. Now, a counter to all of these negative catalysts is that the UK is facing continued supply constraints, which is pushing up prices. But just because there are supply constraints doesn't mean house prices can't fall. Supply constraints can push up historical prices, but they can still have ups and downs. Now, all things considered, it is my opinion that we will start to see property prices come down as we progress through 2023. But I could of course be wrong, and so please do not take this as personal financial advice to you, because that's not what it is. So guys, there we have it. I hope you found this video useful. If you did, I'd love it if you could subscribe, like, and share. And of course, don't forget to subscribe to my newsletter, Business Bites, via the link in the description. Until next time,